That's because Lance trades short only.
Short only in 2024. It's a bold move, Lance. It's a bold move.
Just kidding.
All right, so
But cool.
we've got a lot of. I mean, there's like 250 chats here. Silas, David, Mike, Scotty, Beth, Lisa, Peggy, Hal, Herman, Tom, Susan, Ron, Sophie. Holy smokes! Okay, I can't keep up with the chat, but I think we're at I think the ups are winning right now. Got about. I mean, I'm eyeing it.
You gotta figure out how to do one of those polls.
Oh, that's what you dude. I'm gonna do a poll. You're a
Can you do that?
genius.
Yeah,
Yeah.
I can go do that real quick. What was the
Uh,
question?
all right. Whether you're predicting Nvidia to go up or down on earnings, this is gonna be so much better. Good
Okay.
thought.
It's going to be slow for a second, so give me one little
No
thing.
worries.
It's on YouTube, so if anyone in the YouTube chat wants to say yes or no or whatever, let me know and I'll get that to them.
Man, big room here today. Love to see it.
This is gonna be a lot of fun. All right. Down and then up on Monday, Tom says. Tom's predicting a little
That's a good.
overreaction and then a bounce back. I don't mind that. That's a thought.
I just sent it out, so it should pop up. Should pop up in 1 second. Oh my gosh.
Hey, Graham, Nathan, can you all hear me?
Yeah,
Hey,
you're
we
a
can
little
hear you
quiet.
now.
Okay, good. Oh, I had a little computer itch there, and I should be. I think we just sent the big bill out, so should be good to go now. Sorry for that.
Paul says down on forward projections. That is a very likely case I think we could definitely see. Still hoping for a monster beat and revenue increases.
Well, 6 for 6 the last 6 earnings on beating the estimate. So see if they can go 7 for 7.
Does anyone know the average move over the past year?
I have no idea.
8%.
Yeah, it's about that sounds about right. Good old Nvidia. I think
Yeah.
SMCI is down 8% just today.
Well, yeah, but there was a short report and then a filing of a
SMCI is down
K-12.
19%.
It's down 19%.
Yeah.
Oh my goodness.
Yeah, it was down 25%. That trader, by the way, on Telegram the other day, the super micro $1 million puts was up over 700%. So over
Wow.
like 6 million in profits in 2 days.
Oh, here
Oh,
comes the
there we
poll.
go. There's our poll. All right, everyone should have the poll
Right.
now.
Oh,
Cast your vote.
can't vote. So sad.
Ooh, Kato's.
I'm not allowed to vote. I'm gonna have to sign in
Oh,
on
you
a
could vote.
Oh,
incognito.
yeah, you guys are panelists. Oh my God, this is a giant room.
How do we see what the consensus is here?
You
I
guys
think
can wait.
I think
You
she
have
ends the
to,
poll and then it tells
yeah.
Okay.
us.
Well, because you guys are panelists, you can pull it up, but yeah, I have to end it so you guys can officially see. So just say one and I'll end it. Holy crap, you guys, this is a giant room. This is gonna be so much fun.
Oh yeah, we're here for a party. Tonka didn't show up, but that's all right.
Any outfit changes planned, Lance?
No, oh, by the way, sorry, quick announcement.
Uh-oh.
Oh boy.
I forgot to let people know. You might have realized there's no Stonkamania today, right? He, even though publisher Nate offered him a very high speaking fee, um, he's up in Crystal River, Florida. His tractor came in from the flatbed truck came with his tractor. So Stonkamania called me and said, "Hey," he goes, "Hey brother, the tractor came in. I'll be trading on the cell phone." So he won't be around. His hair, his tan, his
We're missing
24-inch
out.
arms. Not going to be around today. And then he said next week he's going on a cruise. So this guy is just living the life. Tractor
Wow.
cruises. So he's not around, but I think we all miss him. He's been very bearish, but very bullish on Peloton. And then Peloton went up 40%. Some of the calls 170% and sold too early. But he will not be joining us. You got me instead. So we'll wait till he arrives. But he got a new Kubota. So
Good. What a lucky guy. Hey, Deanna, you want to close that poll and we'll see what the results are and then we'll dive right in?
Yeah, just close.
Now, where do we see the results?
Oh, I have to press a button
Oh,
apparently.
there we go. Oh,
Oh,
All right.
wow.
65, say up.
Look at the Bulls.
a lot of bulls.
Well,
All right.
I think Graham is going to walk us through everything, aren't you?
Yeah, I'm going to walk you guys through the way I like to trade, call it the wrap order. So we'll do some training first, take notes, answer some questions, and then we'll jump over into some live trading. Lance will probably just trade basic calls, puts. I'll do some wrap order so you guys can kind of get a feel for the difference between the two. Now, here's my important disclaimer that I typed up a couple minutes ago. We're trading earnings today, which is a ton of fun. It's not my usual strategy, but remember, earnings can be unpredictable and are basically a binary result. You're either going to hit or miss. It's not like swing trading and riding slow, steady stocks. This is getting on the buck and bronco. So don't get too excited. Don't invest more than you can afford to lose. The wrap order strategy I'm about to teach you, it works best on big, stable stocks that drift higher week over week, but you can also use it for earnings, which we're going to do today. So today we're going to go through the normal wrap order training with it's how I trade in the perfect income trade alerts, lightning alerts, NVIDIA Elite. Show you guys how that has done. And then we're going to do some live trading and hopefully get some good setups. We're definitely trading NVIDIA today, regardless. So in my programs, I've already covered, basic options that we can use, buying calls, buying puts, just level one, very easy, straightforward stuff. But today I want to show you my favorite way of trading options because there's a big problem with buying premium. The problem is you have time decay. So if you buy a call and you have to wait 10 days for it to hit your profit target, it's going to eat against you if the stock isn't moving fast. So let's say, for example, if we trade Apple and we hold it for 30 days, we need at least a 2 to 3% move on Apple stock to make money with the call options. If Apple moves 2 to 3%, you're probably breaking even after a month if you're just buying basic calls. Now, the benefit with buying premium on its own is unlimited upside. You can get those big 400, 500, 600% moves. And if Apple goes, to the moon, or in this case, if NVIDIA today goes to the moon, there's unlimited upside. But if a stock only gains 1.5% while the stock makes money and you're right on the prediction or pick, your options are going to most likely lose money. So you'll be right on the direction, you'll nailed it, done everything right, and then you end up losing money, which is no fun. Doesn't seem fair, but that's just how it rolls with buying premium, buying calls, buying puts. So now I'm going to show you how I personally like to get the best upside with limited time decay risk. And I call it the wrap order. It'll make sense here in a moment if you guys haven't seen this yet. So this is the type of options technique that I use in my income services. Basically, we're looking for a small move in a stock for around 100% gain per week, assuming they have weekly options. So let's walk through a theoretical example. If we're trading Apple, and let's say Apple's at $100, just to make it easy, we want to wrap around the current price with the 99 and 101 strike put. So you're always wrapping the current price of the stock. So visually, let's say Apple's at $100 right there, and we think it's going up. We would wrap by buying the lower put and simultaneously selling the higher put. So do you see why it's called a wrap order? Because we're taking two strikes that cover both ends of the current price. Now, in this example, the difference between this is 101 and 99, right? That's what our wrap was. So that's $2 difference. So we would look to get a net credit of half that amount. So half of $2 is $1 credit. When we generate $1 credit on a $2 spread, that takes our risk from $2 and we generated one. So now we have a $1 risk. And now in this scenario, if Apple gains 1%, if it goes to 101 or higher, you would make a buck on a buck risk. So 100% profit. If it, gains more, you still make your 100% profit. Let's say you get a little better premium. Say your credit was 110 instead of $1. And remember, when we're doing credits, the higher the number, the better it is for you. That means your risk is now $2. Again, the difference between 101 and 99 is 2, minus the premium you received, 110. Now you have 90 cents of risk. So in this case, if Apple gained 1% and closed above 101, your ROI is that 110 over 90. It's 122% ROI on a tiny move. So 1% move can pay 122%. Now, I've already added into all the memberships the order calculators where you can do this math without having to manually crunch the numbers. You just punch in the current options prices and it will run all of the numbers for you, all the ROI, your risk, everything you need to know. But first, let me show you why I love trading this way versus any other options method. And this is just my opinion. Nate trades differently, Lance trades differently, everybody trades differently, but this is my favorite way to trade. So let's say we're trading Apple and Apple drops below 99 by expiration. Well, with a call option, it went down, so you lost money. With a wrap order, it went down, so you lost money. Same thing. Let's say Apple stays flat at $100 by expiration. It doesn't move at all. With call options, you lose money because time decay. It goes sideways, you lost money because time decay. Now, the wrap order, you would actually break even. You would get out at a 0% ROI. So it went flat, and it should be like owning the stock. Went from 100 to 100, no skin off your back. Let's say Apple goes up just a little bit. Apple goes up to 150 cents by expiration. So a 0.5% move. With call options, you lose again because time decay. With the wrap order, you would make 50% ROI in this example. Again, those calculators that I posted in the members portal will do all the math for you. So, you don't have to worry about all that. But that's really just to show the power of this. If Apple moves 50 cents, you make 50%. Let's say Apple goes to 101 by expiration. With call options, you might get lucky and break even. Probably not, but you might get lucky. With the wrap order, you make 100% ROI. Let's say it goes to 103 by expiration. Call options, you might make 50%, probably more likely 30%. But again, with the wrap order, you double your money. Now, let's say in a rare case, Apple goes to 110 by expiration. It moves 10% in a week. With the call options, you'd probably make more than 100% because there's that unlimited upside. That's the benefit of trading that way. But with the wrap order, you still double your money there. So this is why I love wrap orders. With call options, look at the different scenarios. 6 different scenarios, only 2 of these scenarios where you walk away with a profit. One with a small profit, one with the big profit. So blindly trading, you got about a 33% odds on your side. Not very good, right? With the wrap order, blindly trading, there's 4 scenarios where you make a profit. So 4 out of 6, now you flip the odds in your favor and you've got a pretty good advantage there just by trading this type of options. And with a directional edge, like a strategy that works where you can isolate when stocks are going higher or lower, you can do even better. Here's the perfect income trade alerts. We've been trading it since October, 70% win rate. The profit in the model portfolio just busted across $104,000 since October. So pretty awesome stuff there. But that's just to show you in real action how it's been able to perform. So let me quickly recap what the wrap orders are and how to do it. So if you're trading, a stock and it's $100, you wrap around the current price with the 99 and 101 strike puts. That's if you're bullish, you would go puts. If you're bearish, you would go calls, but we don't have time to get into that today. So in this example, you would do a wrap order credit spread. You would buy the weekly 99 put and sell the weekly 101 put. You always buy the lower number, sell the higher number because you want to walk away with a credit. Sell the expensive one and buy the cheaper one. So in this example, we said you'd get a net credit of $1 with 100% max profit potential if Apple goes above 101. And again, you break even if it stays flat. So let me give you a practical example here. So in my on-the-clock stocks program, I issued a buy alert on Google. And that first week, the stock went up 2.1%. Obviously, a very, very awesome move there. Now, I issued both the call options and the wrap order to the members so they could see in that first week, the call options were up almost 30%. Not bad, right? But the wrap order was up 81%. I think it ended up closing out at 100%. This was like a midweek screenshot here. So call options, 30%, wrap order, 81%. Even better, the call options were on the February monthly options, which were a little bit longer term, but the wrap orders, we use weekly options that are paid by Friday. And all I needed was a 0.7% gain in Google stock by that Friday to make my full profit potential. So I needed a 0.7% gain to make 100% ROI. And if Google was still bullish, on that Friday, we can then just do it again for the next week. We can enter the position again for the following Friday expiration and target another 100% ROI. And that's exactly what we did. We did it 2 weeks in a row. Both were winners, 174% total return in 2 weeks. So pretty awesome there. Now, the call options ended up doing great for the members too, did 132%, but the wrap orders outperformed. And keep in mind, this is a best case scenario for call options. I should put in here some examples of where the calls lost money, but the wraps made 100%. That'd probably be more powerful. Now, the key to wrap orders is you need a strong stock with weekly options. The benefit is because of the way we trade wrap orders and the way they're designed, you can trade even some of the most expensive stocks for a fraction of the price. And let me show you what I mean. I did this morning. It might have changed since then. Let me check Lilly. Oh, yeah, it dropped a bit. So Lilly, as of this morning, a $950 stock, $950. Currently, next month call options at the money are $29 a contract. That's $2,900. just to trade one contract. Now, I don't know about you. I don't love risking $2,900 to trade, to trade Lily. And to make matters even worse, you need Lily to rally at least 3% to break even on the calls. So not only are you putting a lot of money on the line, you also need it to move 4, 5, 6% to start making money on your investment. But the same wrap order is currently priced. And again, this was this morning. I'll give you an updated one here in just a moment. But this morning, the wrap order was currently priced at $247, and that's $253 risk per contract. So instead of paying $2,900, you'd only pay $253. So it drops the price down big time. And instead of needing Lily to move 3% to break even or make money, we actually only need Lily to move 0.1% by next Friday to earn 97% ROI. 0.1%. That's not 1%. That's a tenth of a percent in a week to earn 97% ROI. Now, I put this in this morning. Let me go ahead and get you guys an updated one now. If you want to take a trade on Lily, I love Lily. Granted, keep in mind, we could see some serious market volatility here over the next weeks ahead with, let me get this real quick, with the NVIDIA earnings today. So Lily is a little bit different because it's 9:45 right now. So I'll just do the 9:50, 9:45 for you guys to see if I can grab this here. I'm going to take a screenshot of this and paste it over. All right, here we go. If you guys want to trade Lily, I'm going to do one right now. Let me pull my Thinkorswim over. Make it easier on you guys. Oh man, this box is tiny. Let me do this. So Lily right now, move some things, trading at 9:45. So technically, you'd probably want to wrap it with a 9:50, 9:40, and you want to get as close to half of the distance of this. So it's $10. So you want to get close to $5 here if you can. Now, right now it's trading at 452, but for return on risk, that's 452 divided by 548 risk. That's an 82% ROI potential right now at this current price. If Lily gets above 950 by next Friday, let's see what 950 divided by the current price, that would be a 0.4% move on Lily stock. So 0.4% move to generate 81% ROI. I'll go ahead and do this one now, and I'll post it in the chat for you guys first. This one's a little bit more expensive. Let me see. The recording will be posted in the members portal for everyone to see. We probably get one for Telegram too. So we're going to sell the 950 put. Now this is where I always mess up. Got it. There we go. Sell 6-7. And this is on Lily. So you always buy the cheaper one and sell the more expensive one. We're wrapping the price. This is currently great question. What is max loss? This is currently priced at 467. Our risk is the difference of these strikes. So $10 minus the credit we receive. So in this case, our risk is $5.33. So 533 bucks. I'll place this one. I'll go get you guys a cheaper one too. Let's say you like Apple, for example. I like Apple. Again, it's probably going to ride or die with NVIDIA today. Actually, let's just do NVIDIA. We'll get one out here for NVIDIA. Now I'm going to pick this week's expiration because we're playing the earnings. So with NVIDIA, right now, the calls are what, $725? You have to pay $700 to be bullish, buy calls on NVIDIA, and you need it to move, what is that, 5% to break even? So you're risking $700. You need it to move 5% to break even. Not really good. If you want to do the wrap order instead, current price is 126.08, give or take. I'm going to wrap it here with 127 and 126. So here, I'll post this in the chat. NVIDIA. Sell, and this is the 30th August expiration, 127 put. And I'll walk you through it here in a sec. AUG 24. Yeah, it probably did just move. The prices right now are going to be moving pretty quick. So you guys look at that. I posted in the chat. The difference of that spread, 127 and 126, is $1. So we want to get at least half that amount in our credit. Right now it's trading at exactly half that amount. That's perfect. Now, remember I said, if you want to trade the calls, they're $700. You need NVIDIA to move 5% to break even. Well, in this case, our risk is only 50 cents. So instead of paying $700, we're paying $50. per contract. And instead of needing NVIDIA to move 5% to break even, we just need NVIDIA to close above 127. So given the current price, 127 divided by 126.06, we need NVIDIA to move 0.7% by Friday to make 100% ROI. And if this is your guys' first time and it's a lot coming at you right now, don't worry, don't stress out. Again, the recording will be posted, so you guys can always review it later and take it slower. I know we're kind of whizzing through here to get to the live trading, but in Thinkorswim, it's pretty cool. Actually, they do the math for you. So once you hit confirm and send, it'll pop up this little window where it shows you max profit, max loss, break even, prices, all that kind of stuff. So that's all in there as well. So I'll go ahead and push that one in there. And it's filled right away. So there we go. All right, let me jump back here. So I hope you guys can see the power of trading with wrap orders. Not only are we able to get options way, way, way cheaper, we're also able to get that 100% ROI with just a tiny move in a stock. Again, this example on Lilly, we needed 0.4% move on Lilly to make our money. And NVIDIA there, we needed, what was it, 0.4 as well. So let me go ahead, put this, ignore this one. I posted the new one in the chat there. Now, how do you calculate your risk to reward? Remember, I've added it to all the memberships for free. Let me just go to one of them and I'll show you where it's at and how to use it briefly. Again, the full training of this class is in each of the memberships. Doesn't matter which one you have. You can watch the full training there. Let me go here too. Oh, I went too fast for you. So, one in membership. Come over here to order calculators. In here, you'll see the full training. You know, you can watch it half speed because I know I talk fast. There's multiple trainings in there. I think we even have the elite trade training in there, which is a whole nother type of trade. But click here, order calculators. We're bullish here. Again, we just did NVIDIA. We sold the 127 puts. We bought the 126 puts. I did one contract and we got a net credit of 50 cents. It'll run all the math for you. Told you your total risk, max income potential, gain potential, break even calculation. Let's say we got 52 cents. We get a little bit better ROI there. Let's say I did 15 contracts. It all updates for you automatically here. It tells you your risk, your profit potential, the percentage gain that it is on risk. Now, I also have it there for bearish. If you're trading bearish, if you think the stock's going down, you would do the same thing with calls. You would wrap the calls, selling the more expensive call, buying the cheaper call. So you would be selling the lower strike price and buying the higher strike price calls. Now, in just a moment, about 4 minutes or 6 minutes from now, we're going to jump into the live earnings session, and hopefully we find some great trades. We're going to trade more NVIDIA as well, but hopefully we find some other really good ones. But here's some extra rules I use when trading wrap orders, and I've got a million chats right now, so I can't really keep up at the moment. But typically, I avoid stocks under $50 if they only have dollar strikes. So let me show you an example. If a stock is $50 and we need to wrap it with the 49 and 51, that means we need that stock to gain a buck. We need to get from 50 to 51 for us to make our max profit. Now that's a 2% gain for the week, which, you know, isn't out of the equation, but it's kind of pushing it. Versus a more expensive stock, like, you know, $100 stock, we still need that dollar move, but instead of it being 2% because the stock is bigger, it's a smaller gain that we need for the week. So I like to trade more expensive stocks here, which is pretty fitting given that most of the good stocks out there are over $100. So you can use it on pretty much all the stocks that we love to trade. And the reason I like to trade those more expensive stocks is because the options aren't fractional. Now, there are some stocks that have 50-cent strikes. So if there's a 50-cent strike on a $50 stock, you can absolutely trade it. And you can trade $50 stocks. But typically, I like to keep it with the more expensive stocks because we need a smaller move to double our money. The same general rule applies for stocks that have $2.50 differences in strikes or $5 differences, like Lilly. We just saw that with Lilly, but we don't have time to get into all of that right now. But basically, you want to be able to trade stocks that need a 1% move or less to double your money, because that's a pretty likely scenario. Rule number 2, you'll want to have a list of stocks with weekly options and only trade the bullish ones. Now, most stocks have these now, but there are some like Progressive. I love Progressive, but it has monthly options and it kills me because I would want to trade it every single week with wrap orders, but it only has monthly options. And that's exactly, you know, what this slide here is for. I typically avoid monthly options if we're more than 8 to 10 days from expiration, because so much can change between now and then. I actually experienced that firsthand. I was testing using wrap orders 4 weeks out, and they got smoked on this recent downturn. So I kind of come to the conclusion that it's easier to try and figure out what a stock's going to do over the next 5 days than the next 30 days. So that's why I typically avoid monthly options. But that said, if today, let's say it's September 13th and a stock has monthly options that expire on September 20th, we're in that window. So that's still in play for a wrap order like PGR, Progressive. I almost always trade it on the monthly options when we get closer to expiration. But it's unfortunate. I would love to trade it every week. But like right now, I wouldn't trade Progressive because a lot can change between now and then. Rule number 3, know your limits, be consistent. First off, never trade with more than you can afford to lose because there will be losers. Even in that perfect income program, yes, the model portfolio has grown to over $100,000 since October, but we're winning 70% of the time. That means 3 out of 10 they're going to go against you, and that's okay. Because if you can find an edge in a stock that has weekly options, it can stack up over time. Again, perfect income trade. There are losers, but there's winners, and the good outweighs the bad. And look at that. You can see the profit over time. This is since October based on 5K stake there. Again, the good greatly outweighs the bad. And the cool thing about wrap orders is if you have a win rate of 51% or better, because our risk to reward is 1-to-1, we're always risking our money to double it, always shooting for 100%. All you need is a win rate greater than 51% to have an edge. Now we have one at 70%, so we've got a really strong edge there. But that just shows the power of wrap orders over time. Now, rule number 4, understand news and catalysts. If you're up big and the Fed speaks tomorrow, maybe take your profits because it's not worth Jerome throwing your trade off completely. We actually did that last week a little bit as well. It can work out great for you. It can also go against you. So I like to try and book profits when I can. Same goes for earnings events. I typically close a wrap order before earnings, but today we're gonna have some fun with NVIDIA because it's just going to either go, hopefully it goes way up or way down, and we can make money off of that. But again, typically if I'm trading my core strategies, I won't trade these through earnings. Rule number 5, this is a fun one. Pair wrap orders with your favorite strategies. For example, like that on the clock stocks example I showed you was Google. We traded the calls, 30%, the wrap order smoked it. So try it out with some of your strategies. See how it compares to the options that you typically trade. Another one, I love using Lance's penny option scanner. I love the news flow scanner and the penny options scanner. They're both a lot of fun to trade. Every time we have one of these trade rooms, that's one of the first things I pull up. So when you see an order there, yeah, you can buy calls. You can buy puts. You absolutely can do that. Lance loves to do that. It's a lot of fun. But you could also use a wrap order. And see, the cool thing about wrap orders, especially on earnings events, is we don't have all that implied volatility baked in to the price of the option. It negates itself when you sell one and buy one. So you don't need that big move to break even. You need a tiny move. So quick recap. I've got 1 minute here. With wrap orders, what we do is we wrap the current price of a stock with weekly options with a credit spread. It is a bull put credit spread technically, but I call it a wrap order so that you can remember that you're always buying and selling around the current price, wrapping around it. And we always aim for around 100% net ROI by the end of the week with just a small move in the stock. Again, you always want to find stocks that, you only need a 1% move or less to double your money. If you start needing 2-3% moves, might be one that you don't want to wrap. But if it's a 1% move to double your money, that's some pretty good odds there. Now, this training is recorded. It will be posted in each of the members portals for review. But what do you guys say we jump over and do some trading now? I know we've got a lot of questions here. Let me answer a couple questions if I can see them. They're flying in, and then we'll get to trading.
I know you'll find it shocking, Graham, but I think the number one question was, you talk fast.
I know I do. It's an issue.
Well, in his defense, we had a lot to get to today because we had some live trading and Lance has to cover some stuff. So he had to rip through that. But like I said, it's all going to be recorded. And if you're in any of the programs, you can just literally jump in anytime. You don't even have to wait for the recording. So
that is true. Same stuff every time.
But we're gonna do it live where you really actually.
All right. We've got some questions here about bearish. So if you want to go bearish on NVIDIA, I sent you guys the bullish one in the chat. Everyone saw that? Everyone got that? Howard, he talks away trades. It's funny. Everyone got no? All right. It's so far away. Let me just post it in here again. NVIDIA bullish wrap. We're going to sell 30 AUG. 24-1, 27 put. We're gonna buy. Oh, this is looking good here. 24, 126 put. Now let me go ahead and get the current price so you guys can see it here before I share this. Currently trading at 50 cents. That's perfect. Credit. All right, here it comes in the chat. This is if you're bullish. If you're bullish, that's what you'll do. And now that in this scenario here, you only need NVIDIA above 127 by Friday to earn 100% ROI on your money. So if it doesn't matter if NVIDIA goes up $3 today, it doesn't matter if it goes up $1 million today. You just need it above 127. Now let's look at a chart. Here, let me take this off and make it a little clearer for you guys to see. To give you an idea, NVIDIA above 127, how hard do you think that is? It was there earlier this morning. It's about to be there again by the looks of it. It barely has to move. Now, let's say you're bearish. Let me give, for all the bears here in the room, again, same thing, just with the call. So we're going to sell the more expensive call, buy the cheaper call. So you would sell the 126, buy the 127, again, trading at 50 cents. Now, in that scenario, you only need NVIDIA below 126 by Friday to make your money. So let me go ahead and post this in the chat. NVIDIA bearish wrap. Now, I'm not going to do this one because I'm going full bull.
Graham, what trade are you doing? I got scratch offs around my neck and I'm ready to roll the dice.
All right, let me post this in the chat, and then I want to be there to see us hit it big on your scratch offs. Maybe Stonkamania will come back.
Oh my God, wait, has no one seen the scratch off thing?
Yeah, I gotta do some. We gotta figure out how much we're gonna risk.
All right, I said it there to you guys. I'm not going to do this one, but that's if you guys are bearish. If you think NVIDIA is going down, that's the play you want to take. Again, if NVIDIA closes below 126 on Friday, so literally 126, it doesn't even hardly have to move. You make 100% ROI.
Wow.
Man, I've got so many chats in here. Let me copy this. I'm going to post them both again for you guys. I wish there was a way to like pin it in here.
I also put it on YouTube in case anybody is on there.
Oh, cool. All right. If, yeah, you can, if it's like way up tomorrow morning, you can exit. I typically try to let it expire on Fridays. But if it's, way up and it's worth a penny, you can let it expire, or you can close it out if you want to. And now again, to remind you guys, the bigger number you can get up front, the better. You want a higher number when placing the trade, and then you're going to buy it back for cheaper. So if we sold it for 50 cents, we want to buy it back for less than 50 cents or let it expire at zero. Expiration is a great thing for us. So that's there in the chat. Now let me go ahead. Lance, you want to take the screen here and show us what you've got dialed up?
Yes. Let's get rolling here. I'm ready. To say the least. So let's go ahead and grab the screen. And we're going to start off how we always do. We got about 300 scratch offs. So we're going to rip one, pick one, anyone, tell me to stop. Stop. Well, let's make sure we don't rip it. So we're going to scratch this off. However much we win, we're going to 10x it and put that for some trades. If we lose, we'll do $500. So we'll still have at least something going on. So let's first start. We should be seeing the screen. Do we have the screen, everyone?
Yep.
All right, good. So what you're looking at is the penny option scanner. And then we'll also look at the big boy scanner. That's what I've been calling the news flow scanner. We got a few names. One, and I'm going to get a copyright strike on YouTube, so don't hate on me too much. But one is American Eagle. American woman. So we got the American Eagle. We'll probably do some HPQ. I actually like those hood calls that just hit, the weekly 20.5s. So that's obviously a play on the market if we get a big pop tomorrow. But let's first do some scratch off. We'll do one of them and then we'll 10x it if we win. You may be saying, Lance, what are our winning numbers? Let's go ahead and get that up close. So we got 19, 31, 38, and 7. Let's do a little scratching and see if we could get anything. First line, negative. Second line. Ooh, Graham, Nathan, y'all are bad luck. Usually at Stockomania, we like to get the scratch offs right.
Well, it's probably because you didn't dress up, man.
I think you have to do one more because Nate and Graham are here. So you have to do one for them.
No. That's it. That's all we get. That's all we're gonna get with
Everyone
scratch
press
off.
your hand, please.
Obviously, we did not win. But let's get to a few names. You may be saying, Lance, what do you think of NVIDIA? Here's a coin. Heads up, tails bearish. Tails, we'll lean slightly bearish. You know, I had, if you're in the option pit, which is the penny option scanner, private Telegram, I had the weekly 125 puts in NVIDIA. I closed those out for about 68%. I don't know where it's going to go. We'll look at the flow. But what I do like is, why would the CEO be on Bloomberg to chat if not great numbers? Virtual. Is that the name? Very smart direction thinking, actually. But there's actually a couple names I really like today. Y'all know, if you're in Shadow Trader, I'm in the urban of the outfitters. It's a mall retailer. I've been loving the retailers, love-hate relationship. We did see some DBI. So DBI is designer shoes. They make the shoes. What is a DBI? DSW, I think it is. Designer brand shoes. So we did have some September monthly. That is the monthly in DBI. September 7 calls. Now let's go to the option chain and look at these calls, and then we'll get into a couple names for earnings. So DBI, let's go ahead and take a look at it. What do we have upcoming in DBI today? Not today, but upcoming. What do we have in DBI upcoming here on the 11th of September? We have the earnings event. Now, with earnings, what's going to happen to implied volatility heading into the earnings event? We're going to have implied vol. So this is actually a strategy everyone can use. What do we have leading up to an earnings event, everyone? What happens to volatility? And we traded some VIX calls in the options pit today, which was very good. Bought some calls this morning and closed out. Volatility goes up, right? Right before earnings. Then what happens to volatility right after the earnings event? It gets crushed, just like Pete said. So what you can do, a little strategy, and this is why I like that DBI order, you could buy calls into the earnings, and even if the stock stays flat, volatility in the options will increase. So there's a possibility to make money just off volatility. So let's go to this trade in DBI. All right. So we can see the September 20th expiration. You can see here, it is the 7 strike calls. Volume was 1,000. We can actually click on the penny option scanner. That's what you're looking at. Was 1,017. Open interest is only 122. So volume greater than open interest indicates it's a brand new opening position. So we do like to see that, as always. And then we also see here the total option contracts that have traded today. So this trader laid out $90,000 worth. Make it real big so everyone can see. So 90 grand, and they paid above the market. So when a trader pays above the market, it's usually a good sign that they want to get in a hurry. And DBI is a little itty bitty stock. It's, you know, $7 or so. So I like this. So first we're going to do what I would consider a more conservative trade in DBI. And that's just going to go ahead and be right there buying those DBI September 7 calls. So I'm going to go ahead. I know I said I'll do $500 worth. Let's stick with that on this. So we'll do like a 5 lot right at 95. And we actually got filled at 92. So a little swing trade. Remember, the September 20th expiration does capture the earnings event on the 11th. So I'm going to post these in the chat if you want to take. here in DBI. So we'll do a little safe stock, not necessarily safe, but a little small play for a warm-up until we get into the big boy earnings. Now,
how many did you do?
I just did $500 because of scratch off.
Did you
since
say
we didn't win? If we
did
would
you
have
say
won,
you paid 92 cents though? Isn't
It's 93
Listen.
right now. Same thing.
on the sevens?
it's 90 by 95. I just did market at 95 and I got filled at 92.
Wow.
As you can see,
They
I'm
like
at
you.
92. Yeah. So pretty good fill. Didn't have to pay full ask. But the next trade I want to go over is this is an earnings trade. So this is what I would consider higher risk. Now, as I posted in the chat while Graham was talking, what just hit the scanner? So this is the big boy scanner. HPQ, the weekly 36 puts. So it's only 128 grand. And I know what you're saying, Lance, 128 grand is a lot of money. But you have to think HPQ has traded almost 8 million shares. It's traded 48,000 options today. So 100 grand isn't a ton of money for this stock. But what I do like with the big boy scanner is they bought the 36 puts. So the 36 puts are deep in the money. Usually in the money trades have a higher probability of working out. Out the money could be hedges. So I like these for earnings. Now these are going to be do or die, right? So if HPQ goes up, the puts will go to zero. If HPQ goes down, hopefully the puts make money. But instead of paying $2.07 for these puts, you know what I like doing? I like trading the penny options. So the options that are very, very cheap, usually right around $1, right? My whole thing is I like cheap options because expensive options, when you're wrong, well, you lose a lot of money. Cheap options, when you're wrong, you can only lose your initial investment, right? So you can't lose that much. So what I like to do, what strike? Let me ask everyone in the chat. What strike could you do in HPQ to play it bearish instead of the 36 puts? The 34s, the 34s, the 34s, the 31s. Oh gosh, you're a little too far out the money. Now, how we can calculate the trade, and this is a completely, ooh, it's a big trade in super micro. How we can calculate the trade is we want to see what is our downside target. So this is my earnings indicator, completely free. Just send an email or call us and we'll give it to you free. Or Deanna might have a link for it, completely free.
Yeah, I'll drop it.
So the downside target that the market makers are expecting is $32, right? That's our market makers target. How do you get that? Well, it's simple, and this is why it's free. There's nothing freaky deaky about it. All you have to do is take the market makers move. So if you're using Thinkorswim, it will be MMM, market makers move. Pretty simple. And then what you'll do is you see there's a plus minus sign and it's about 275. So all you got to do is take the stock price. So 34.80 minus 275. And that gives us what? 32.05. So that's the bearish downside market makers expected move, right? DBI has earnings September 11th. So you have a little bit more time. So there's a swing trade on that one. So what I want to do on it is take HPQ. And like y'all said in the chat, if we buy the 34 puts, so they're about, let's just say $1 to make it easy, and the stock goes to 32, those puts go from 34 to 32. That's a $2 difference. So the puts will go from $1 to $2. That's a 100% gain, or a double, right? So we're going to do this small, $500, like we said in the initial trade. And let's just go ahead and copy those puts. So instead of doing the 36 puts, let's just do the 34 puts. And I'll post this in the chat as well. We got to get some earnings in, right? So we're going to do the weekly, August 30th, expiration, 34 puts in HPQ. All right. And they're about 98 cents, 99 cents, 98 cents or so. So again, keep them with the $500 range. Now, what's going to be the profit target since we're doing earnings? At least the double. You know, when you're doing earnings, we got some Google calls hitting again. A little repeat flow in Google there. When you're doing earnings, I want to shoot for at least 50% to a double. If not, you're better off not trading earnings. You're better off just, doing a correlated swing trade, something like that. So we're going to go ahead and set our profit targets to $2 on some of them. We always want to shoot for a double, right? We don't want to go over a double, or we don't want to go under a double. You could do 50% if you're if you want, but this is do or die. If HPQ goes up, obviously the puts go to 0. HPQ goes down under 33. That will be our break even. Then we start to make money. Hopefully we go down to 32 or below. That would be ideal, right? 32 or below. So these are a couple. Why not buy a couple weeks out? Very good question. So let's say you want to go to next week. You're going to pay about 7 cents more. Me, I don't like to wait. I want to know my fate instantly. So if I'm wrong and I lose $500, I'm wrong. I don't want to wait next week and say, oh man, I hope the stock goes down. I like to know my fate and that's it. I don't want to hope and wish the stock goes down over time. I want to know instant. I want that instant kind of gratification. For DBI, what will be the profit targets? Well, let's say we got filled here at 92. Probably our first profit target will be about 30%, so about 125. And then what I like to do is just keep the balance into earnings. So if we get a run up into earnings, sell half or sell some. And if we keep going higher, post earnings, then you can ride it, right? What's good about these are in the money calls. I think that's what you really do want to do at the moment. You want in the money options. You don't want the out the money options, on a cheap stock. So like stocks that are, I would say under $50, try to stick with something near the money. If the option's, $100 and you buy the 102 calls, that's only a 2% move, right? So you don't have to have a big move in the underlying, right? We want the cheap options, the cheap moves. They give you the best risk versus reward in trading. And you can do that. You can do a bear call spread if you want. I don't spread it out. I'm not a spreader. I don't have margin in this account. This is just a cash account with like 27 grand in it. So I don't have the ability to do spreads and stuff like this in this account. So I don't do any of it. We do have a question on the hood. Shall we take a look at hood? Because people are asking about the hood that hit. Where is the hood? Let's look at the hood and then we'll see if anything else hits before the end of the day. Oh, that American Eagle hit. Remind me to get back to that one. We do have Urban Outfitter calls. So, and we have some GLW. Man, the people are on it today. Do y'all want to look at GLW or the hood? Because we did have a repeat order in GLW. Oh, good eye, GLW trader. Good eye, GLW trader. So let's look at this one in GLW. Now, first of all, we do see 2 bullish orders. So this is what I like. It means, think of it this way. You go to the Publix or Whole Foods. You buy some chocolate chip cookies. You eat one of them. And you say, man, those are good. And you grab another. The more cookies you eat, the better it gets. Maybe not for your health, but the traders coming back wanting more and more. That's what I like to see. So this GLW is very interesting. So thank you for bringing that up. I do like this one actually a lot. So GLW has the next week, and these both hit yesterday and today. GLW has the next week 42 calls. So we can see the September 6th expiration, and it has the calls that expire on Friday here in GLW. So let's look at this one. And what is a GLW? It's a chip, right? Or did they make the glass for your phone, right? What is that what GLW does? I always thought it was an iPhone stock.
I thought they do. Is it Owens Corning or no?
Glass.
Oh.
Optics, glass. Yeah, okay, that's what I thought it was. So let's look at these calls. Wow, these calls have already moved up pretty nicely. So let's go ahead and look at GLW, and let's look at the how about we look at the next week calls, the September calls. All right, so let's look at these. The September 6 calls are about $1. The weekly calls are about 75 cents. So basically you would need GLW to move up about 35 cents between now and Friday expiration. I kind of like the next week calls just because you have 9 days instead of 2 days. Oh, and then we're going to look at American Eagle. All right, so let's do some GLW calls while we're at it, shall we? Let's go ahead and do, oh, Marg. Marg has a very good point. GLW has a dividend upcoming. GLW has a dividend upcoming. Scratch. Thank you, Marge, for pulling that. GLW has a dividend upcoming. When a stock has a dividend, I usually like to avoid it. So thank you, Marge, for bringing that up. GLW has a dividend. I don't like to mess with the dividends because it's going to come out the option price. So I usually don't like the dividend. Thank you for mentioning that. We do have some Google calls here that I do like. The weekly 167s. All right, let's go back. Y'all want to look back at Hood or American Eagle? I think we have the people. Yeah, let's go to Hood. Yeah, the dividend stuff, I'm just not a huge fan of because you're going to have the stock drop on the dividend and it just kind of gets messy. Okay, so let's look at Robinhood. We're going to full crazy stock territory with Robinhood. All right, so Robinhood, let's go to it. The September 6th expiration, 20.5 calls. Okay. It's bullish, bought above the ask. And about 55 grand. 1,640 have traded. So let's go to Robinhood. I like this. The stock's down almost 5%. Let's pull up the Robinhood here and go to these options. All right. Oh, these look good. And let's make sure we don't have any dividend or earnings in Robinhood. I think we're good. All right. We're good on Robinhood. We don't have any dividend. We don't have any earnings. We don't have any funny business. All right. So that's good. So let's go to Robinhood and let's just go to the same options that the big trader did. Not huge. Again, only 50 something grand. So not a ton of money. Now these calls, they first did 1,640. And you can see volume is now 3,580. So volume's picked up in these options. They're very, very liquid. They're penny wide, no pun intended. And we do see open interest is going to remain the same at 1,150. So they're about 62 cents. So basically we need Robinhood to be a little over 21 bucks by next week, September 6th. So I do like these. Let's go ahead and take these. We'll do again about 500 bucks worth. So that would be what, about what, 8 contracts or so? And they're about 62 cents.
Did you see AFRM has earnings too?
Pardon?
Affirm Holdings, AFRM.
Who does?
AFRM.
Yeah, AFRM is a little bit of a junky stock. So
Yeah.
Hood, SEP6 expiration, and we did the 20.5 calls. All right, perfect. So we got
3
some
minutes.
names, nothing crazy to play. I did like this American Eagle stock. I did like this American Eagle that hit the big boy scanner. Well, some Micron calls there. I did like these American Eagle calls that hit the big boy scanner. But they are, if you have Urban Outfitter calls, you're basically playing American Eagle earnings, which we have a lot of Urban Outfitter calls we did already. Urban Outfitters, American Eagle, same kind of mall retailer. This was a big trade I love, though. Urban Outfitters, the September 6, 36 calls. I did the monthlies in Urban Outfitters. So just a little heads up there. And Urban Outfitters there. All right. Let's get to a couple questions, and then let's just see if anything hits in the next 2 minutes before we
Nate, what do you got? What do you got on deck for us
wrap
today?
up.
Dude, I've just been busy following all you guys' trades. I've got Nvidion, HPQ, Hood, DBI.
All right, what is
My fate
what
is
do
in your
y'all think-
hands.
What do y'all think with Nvidia? Because I already made my money in it. I have no skin in the game in Nvidia, but I'm curious what y'all do. You know, you could play the SMH, the semiconductor ETF. You could play like Super Micro if you're a gazillionaire. You know, trade that one. There is correlated semiconductors, Intel. There's some Nvidia puts sitting here. Again, you may be saying, Lance, that's $250,000 in Nvidia puts. Again, Nvidia, it trades millions of options a day. If you buy, let's say, 1,000 contracts or so at 250, you know, that's $250,000. So it's really not a lot of money for Nvidia. If it was like 10 million, 20 million, then I would say, yeah, that's a pretty big chunk of change for Nvidia. So it's going to trade so many options throughout the day because it is such a big stock there in Nvidia. You could play AVGO. That's a good one. Let's actually look at that one. And Avgo.
It's gotten a lot cheaper too. You don't need the $1 million account for Avgo anymore.
They're 370. Oh.
Well, I know, but pre-split they were 37. So
Yeah. If you have Nvidia, let's say stock, someone in the chat mentioned you could always do like a covered call to reduce your risks. That is an option. Again, I'm not a big spreader, to be fair, so I don't really do all the spread stuff. It's more Graham, but it is a way to reduce your debit.
I just bought more Nvidia. Well, I sold more Nvidia wrap orders. Greg had a good question about doing an out of the money debit spread on Nvidia. I looked at it. It's still pretty expensive. Even like $7 out is still 45 cents on a dollar spread. So not much upside there. Hey, Lily's at 950.
yeah. Well, I mean, that's how I would typically look to trade Nvidia. I mean, you guys know I like the spreads. I would typically try to go, 3 or 4 strikes, put a debit spread on it, and try to get, 300% or 400% even on a move. But the problem is, if you needed to make the entire market maker move to hit, I don't like it. I like to be able to shoot for half or a third of the market maker move and still make my 200 to 300%. Nvidia is just not giving you that right now.
And here's the Nvidia. You can see, and I feel like this is going to be exactly a move. The bullish upside move, according to the market makers, is just shy of 140. The downside move is about 112.5. So that's a pretty decent implied move. That's what, about 10% or so, give or take. And the average move in Nvidia is right around 8%. Now, a lot of people have asked me, and we are very, very active in trading, especially in my options pit. We had a real good trade in VIX calls this morning that, if y'all look at the VIX, it shot up from this morning. If you are not part of the penny option scanner, it is not available to the public. I just want to disclose that. It is not available to the masses. Some of you may see stuff on YouTube or Market Watch or Yahoo Finance, but what we have for people who want to get into beta testing, it took us 8 months to develop the penny option scanner, as a lot of y'all have seen. It's taken way more than expected, and I want to thank you for sticking around. And it's not because publisher Nate said, Lance, make another product. In fact, I want to give you all tools, software to help you all so you all have the power, because the option market is evolving. I've had my trades. I've seen trades. We've seen short sellers. We've seen people out getting these trades featured on TV, on news media sites. They're becoming more smarter, more strategic than ever before. And it's being monitored even by the broker platforms. Just like it said today, what are the whales doing in stock XYZ? What's the whale flow in Lucid Motors? What's the bullish activity in Salesforce? The tactics that used to slide under the radar, no longer. And it's led to a different shift how big traders approach the market. Lots of media platforms pick out option orders over 100K. Sadly, 100,000 bucks isn't a ton of money anymore for the markets. Broker platforms, the media, even the news flow scanner. We've had multiple people try to recreate it, but no one tracks orders of 100K or less. And we're starting to see the smartest traders have a leg up. And in order to stay under the radar, they're placing smaller, more frequent orders and cheaper options frequently. So they're not just going buying $1 million at once. They're buying 50 grand, 70 grand, and keep on and on. Another 50 grand, another 70 grand. Next thing you know, they're up to 200, 300,000. And that's created a new opportunity. And let me explain. This is what these trades, when they're broken up, they look like. 700 contracts, 42 grand, 1,200 contracts, 77,000. Then we had 987 contracts for 59,000 bucks. So this adds up. 1,600 contracts. You know, they're not like you and me. Maybe we trade 10, 5, 20 contracts. They're trading thousands. And that added up to 99 grand. When you look at 45 minutes over 4 purchases, they were up to 277 grand. Now, that's a good chunk of money. Had that been one order, it would have gathered attention. Market makers would have panicked. But since it was under 100K, went under the radar. No one really noticed except for me. In this case, the stock surged. The options was up 100K, 100%. So that trader was up about 277,000 bucks. And that's what we look for in the penny option scanner. We look for these unique odds, unique stocks with repeat buying over and over again. And we've seen these opportunities that we want to target. If you recall, a few weeks ago, we had a live room just like today, and we saw 4 orders in Nike. And you can see they were all bullish orders. They were all the weekly options or next week expiration, and they were all right around the share price, 80 bucks, 79 bucks, 80 bucks. Now, when you add all these orders up on Nike, you can see 90 grand, 91,000, 57,000. It added up. And then Bill Ackman, a billionaire hedge fund manager of Pershing Square, took a stake in the company. Our options paid out around 140% overnight. And some of you did better. Parag, 350%. That was on the weekly. Danny, 230%. Michael, 220%. Nike, 124%. We also had a trade in Intel and Palantir, 50%. George, 4,320 bucks on Nike. $997 turned into over $5,000, Richie says, on Nike. This was a big trade. It was very exciting. I was pumped up. Now, it's a shame because we found some of these opportunities in the Diamond Club, which is now we are doing these trades each and every day, multiple names in the options pit. We've had 100% returns on days. Today, we had about a 35% return on the VIX, some nice trades in VFC, about 68% in NVIDIA puts. McDonald's, 214%. So we invited everyone today because after 8 months and multiple people reaching out, we have the penny option scanner available. If you want to get in before everyone else, before it goes live to the public. It tracks orders under 100K. Thank you, James. Appreciate it. Says it's a great tool. Love it. If you want to become a member, here's how it will work. You get 90 days, unlimited access to the penny option scanner. Each week we do trainings on it. Strictly trainings, questions, answers. They're about an hour long each. Of course, they will be recorded if you can't make it. So not only will I give you access, I'll teach you how to use the scanner. And in the last couple of weeks, it's had pretty incredible opportunities. We had Pinterest puts about 183%. All it costs for 10 contracts was $1,500. That was the game. Now, of course, not everyone will be a winner. You'll have winners, you'll have losers, you'll have break evens. Of course, nothing wins 100% of the time. But I'm confident over these next 90 days, you will have some fantastic opportunities. Now, of course, we can't give it for free. It's taken tens and tens and tens of thousands to get it up. But as a beta tester, we will make it worth your while. When it goes to the public, it will be $19.97. Today, you get a $1,000 discount. Plus, you get 90 days of. So you get 90 days plus a full year. That's only $9.97. Here's the best part. The membership fee is 90 days on the house. That means it won't start till after the first 90 days pass. My goal is to make it up, cover the initial costs. Of course, we can't guarantee that will happen, but we've seen it multiple times with fantastic folks out there. If you want to get the penny option scanner before it goes public, and there will be an opportunity to join the options pit, where you can get the Telegram, each and every trade alert, my private channel that I use my own money, for trades, day trades, swing trades. You'll get all these opportunities. Go to LanceIppolito.com/penny. If we could post that in the chat. CA says the penny scanner is one of the best tools I've bought in a while. Love it. Thank you for the kind words. And Deanna will post the link in the chat if we could get that posted out there. Thank you, Josiah. If you want to call someone, 904-404-8873, press 1. We do each and every training once a week for penny option scanner members only. Just like the news flow scanner, there's nothing to download. It's a simple website, so you don't have to do anything fancy or anything to get in. All the signals, I would say you get about 20 to 40 a day. They work on your cell phone, laptop, or mobile. Fluffy says, love penny scanner, 73% win rate on it currently. Love to hear that. Save $1,000 off. And the reason why, when it goes public, it will be all over the sites like Market Watch, Zero Hedge, CNBC. Save $1,000 today. Click the link in the chat. We've seen some great opportunities. Just look at some folks had to say, like Ken, $1,700 on pin. T at a double, Keith said. Rose, who's fantastic, 544% profit. Go to LanceIppolito.com/penny. After you fill out the order form, do not close your page because we have something very special. I think we have 198 folks in it. If you want to receive all the favorite scanner signals in real time, it's the fastest, quickest way to get every alert. It's the option pit. So basically, it's the trades that I like the most. I'll provide commentary, entries, exits, in the option pit Telegram. It's the only place where I share all my favorite scanner signals across all the different scanners. So if you have the big boy scanner, get the penny option scanner, sign up for the option pit. We had GIS this week, 50%. It's up even more now, actually. We'll share all the details on that page, but note it's only for penny option members out there. Now, if you have any remaining questions, feel free. We'll answer them in the chat. But just to give you a 5-second rundown, at LanceIppolito.com/penny or click the link in the chat. It's only $9.97 for a full year plus 90 days on the house. So really, it's about 15 months. Free training sessions every single week. We usually have them on Tuesdays or Thursdays. $1,000 discount and early access to the scanner before it goes public. So check it out if you scan, and if there's an option to join the options pit, See if you could join that. It's very, very active. I give all the signals from day trades, swing trades, long-term trades, what I'm doing, market commentary, when to get in, when to get out is in the option pit included. If you want to call, we have a fantastic team. Nathan did a great job hiring and training customer support at 904-404-8873. Call, say, hey, give me the hookup. I heard it's $1,000 off. Call Chad, Kristen, Caitlin. There's 2 Chads actually. And say, give me the hookup. I was on the training session. Lance said there's $1,000 off the penny option scanner. What can you do? And they will hook you up. Do I know when it's going public? I would say, what do you think, Nathan? A couple months, maybe longer?
Yeah, I mean, I think we initially said November. So, and then we had some time getting some kinks worked out. But congratulations on pushing it through the finish line and getting it live and already having a whole bunch of winners so far.
Thank you. We wanted to have this done back in January, actually, but we worked with the CBOE to get it up and running, and it took longer than expected because of the data, and we had to pay a lot of money to them. I think they doubled our fees and such. But I would say on average, you get about 20 to 40 trades a day. You have a search feature. You could download the data. You see the ticker, the expiration, the strike, if it's bullish or bearish, calls, the premium, if it's bought above the ask or at the ask. So it's straight directional trades. You get to see the volume, so you know exactly what strike the trade is at and the open interest. So you get all the details with the penny option scanner. You can make it big. You can put it small like I do on the side of my screen. It works on your cell phone. It works on your laptop. It works on your PC. It's very, very cool. All the updates, by the way, are 100% free. So after you pay $9.97, or if you join the options pit, which I think for a year, that's how much, Nathan? Maybe another $9.97 or so. You'll never pay any more. All the updates are completely free in it. And you don't have to worry about ever paying anything again, thankfully. All right, let's get into some questions. Nate, Graham, or Deanna, if y'all have any.
The people love it.
I mean, the main questions are, number one question is, Lance, I love the penny option scanner. So that's a lot of chats with that. But no, it has been sick. I mean, honestly, watching the, well, first of all, I should say, you roped me into the penny option scanner because you said we'd use the same data that we were already paying for from the CBOE. And then, fast forward a couple months, now we have to pay for a whole new feed to get this thing done and cost thousands of extra dollars for the company. So thankfully, Lance has paid it off and actually hit a lot of winners. But that's the real story in case you guys don't know. But no, it's been sick to see it come together because Lance has been saying now since last year, hey, these option trades are getting a little sneakier. I'm seeing them kind of in my own database scanning through. They're coming. They're harder to find now because of the way they're being broken up, all this kind of stuff. And we haven't really been able to see it visually all that time until we finally got this piece together. And so to see that come together and then immediately have all the winning trades that Lance has been pumping out there has been a really cool experience from us kind of on the outside looking in, because for a while there, it was just kind of Lance mad scientist saying, "Oh, I dug this order out. This is going to be what the penny option scanner is going to show once we get it live." And we're just like, "Okay, Lance, sure, sounds good." And then finally, once we got it to actually where people like us could see it, we're like, "Oh, we get it now."
And I see some people asking, "What's the difference?" So let me explain the difference for everyone, cut and clear. So the news flow scanner is what I call the big boy scanner. You're going to see orders 100K to millions of dollars. So you're going to see 100,000 to millions of dollars out there. It's going to be tons of stocks. By the way, HPQ, a nice downtick here.
Type in AFRM on your big boy scanner and then go look at the chart.
So you're going to see big orders. You're going to see some of the common stocks like NVIDIA, Micron, Netflix, Amazon, gold. So you're going to see a whole range of stocks, right? With the penny option scanner, you're going to see more under the radar, sneaky orders, people building a position, more day trades, more cheaper options that are only 30 days out or less. They're all under $1. So you'll never see an option more than $1. So the option range is, I believe, from 10 cents to $1. So the cheap options, that's what I love. And you're going to see the range from 50,000 to 100,000. So right in that ballpark to where the trade is big, but it's not big enough where it's going to tip off the whole world. And that's what we want. Thank you, Joe, for the kind words. Wow. From 7,000 to 12,385 bucks. Not bad for 4 trading days. Thanks to Lance and the rest of the staff. Joe, fantastic job. Making 5,385 bucks on a 7K account is pretty darn fantastic. So love to hear that. And if you get the penny option scanner, there should be a link where you can get the and can we post the link? I don't think I see it in the chat.
Yeah. I'll grab that in a second.
There should be a link too where you can join the option pit as well. So check it out if you can. It is a game changer in the option world, and get in before it goes public. You'll spend at least $1,000 more, if not $2,500 more. We just want to honor all the folks who are members to get in at this early rate before it does go public and to the mainstream. So it's early access, EALY. I type horrible, as y'all know. And you get 90 days on the house. So you get 90 days on the house plus 1 full year free, or 1 full year included. So 90 days free on the house with that. So it's going to be fantastic. I think you're really going to enjoy it. All the updates are completely free, by the way. So if you don't have it, get it. If you do, I'll see you next Tuesday on the training session. We meet at least once a week when it does for the members, and each session is usually about 1 hour long.
They're 2 hours.
Yeah, sometimes 2 hours. We do have, oh, look at, I didn't even see that. Thank you for mentioning it. Afram hit on Monday the weekly 37 calls. So again, these are going to be cheap options, 67,000 bucks, and Afram is up how much? 17.5% after hours. Nice. Oh, great. Fantastic.
I know.
Love to see
Junk
that.
stock.
Love to see that.
Killing
Great
me,
job.
Lance.
Fantastic. And we're about to get into some of the earnings. Let me post the link there. So it's just my name, LANCE, Ippolito, IPPOLITO.com/penny. And it will take you to the link. And again, save $1,000 plus 90 days are on the house. All right, let's get into some questions. And Graham, if you want to maybe take it away. I think the video is starting to come out here in the next minute or so. I don't think they're out yet, but I think they'll be out here in the next
Starting to move.
minute.
Oh, it's going down.
Yeah, just a little pre-shake, I think, right now.
This is the best part. This is where you feel your heart, pumping.
I think the earnings are out. It's just the stock's not moving. Wow. So no move on the video.
HPQ had a quick dump, came back a little bit.
Yeah, it's down. It was down to 32. I should have did the a little buy. Lock in the gains.
Yeah.
Yeah, NVIDIA no move though.
Burgers?
Wow. No move on NVIDIA. I'm kind of shocked at that.
Are they posted?
Looks like they beat earnings top and bottom, but as we know, market usually likes a little bit more. So yeah, no move. It's literally flat as a pancake, up $1, well, up 40 cents now.
Yeah,
beat on EPS and rev. Nice.
No, it's $9.97 for 1 year. Pardon me. 1 year. 1 year. I don't know if there's a lifetime option. I would probably call in at 904, 404. That's it. Yeah, so NVIDIA, no move. So it's a nothing event. Wow. A 10% implied move, and the stock is moved 50 cents. Oh God. And they did a buyback of 50 bill.
Oh,
Yeah, so the premium sellers looks like they got that one spot on. So yeah, a no move. Wow.
well, it's better than a big 20% down move.
Oh yeah. Well, it's going to save the market too.
Yeah. I
It's going to
bet you,
save the market. NVIDIA holding up here is obviously a huge relief for the market. And you can see that's why the VIX had a pop today, because there was so much fear of the NVIDIA print. Yeah.
I know we're not gonna get a big move, at least not likely to get a big move unless something crazy happens in the call. But Graham, what do you need? Only like 127 on your side?
127. Yep.
Yeah.
So we're definitely still in play.
Still in play for that.
At
Gotcha.
126 right now. It was just at
Yeah.
127.
They're doing all their they raised their Q3 guidance. I get all the news here. I like to see everything in real time. And then they're talking about some AI, blah blah blah. That's what I think of AI. Yeah. Well, they raised their guidance, so
Yeah, that's crazy.
yeah, I think for the stock to go up, it might have to process for a little bit.
Mhm.
We'll see. We'll see.
So double
CRM's up
beat
a
and
little
they
bit.
raised future guidance and they still sitting flat.
Yeah. Yeah, the only thing up is really Afram. CRM's up a little bit, but it's only up $10. I don't think $10 is going to move the needle, even on Salesforce. Yeah, Salesforce was
Unless
a
you,
$21 implied move, so those options will
artificial
not
ego.
move either. The market makers are going to be the winners in this example. Yeah, and they had a $90 billion buyback, so no move. So good job closing the puts. The
Oh,
125. The
downside.
stock at 121 now.
Yeah.
Still not going to move those puts. I sold for $7.
They're waiting for Nancy Pelosi to get her order in. This is Joe.
Yeah, you're gonna have to wait for someone to buy calls on there. On maybe Nancy or so. Okay, I see some now. Graham and Nathan.
What do you see? All right. Well,
Oh, we're moving.
not a
We're
bit.
moving.
Guess I'll go get dinner with the wife and come back and see what NVIDIA's doing after.
Oh, we're
down
getting a little sell off in the video now.
Yeah.
Maybe I should have held my 125 puts now, huh?
Uh-oh. Should have had the puts.
There's $7 in the money.
117.
There's $7 in the money. But still a very light move. What was the downside move on the video game?
113, I think.
Yeah, 112.30. So got a lot of room to run a little bit.
It'll be interesting to see too if the market buys it, if it does open down here, if the market buys it up in the morning. Because we've seen a lot of that lately.
Super micro down 20. Ooh, the Nasdaq's starting to go down here.
Oh, I'm sure.
Yeah, Nasdaq down. Yeah, Nasdaq's starting to sell off. Ooh, Lance, those puts would be $10 now. I would have had over a double. Ooh,
Oh, 115 now.
Yes, 116 print. AMD down a little bit. And we're holding.
Down $7.
And the buyers came in to save it. Well, still a no move. Anything under 113, I would say, is a good move, but anything else, not much. But yeah, check it out, gang, if you can. Go to just my name, lanceippolito.com/penny. And if you can join the option pit, it's very, very active. I post in it all day. And we'll have our training. You can see post tons of it all day. We had some VIX calls today. Google, I lost about a nickel in it. VFC was very nice. I think around like 40%. Very, very, very active. Lucid was a nice trade as well. Freeport, I did lose in, or I am down in. VFC was real good. I bought some GH puts. Look at NVIDIA bouncing back. Oh, why didn't I grab shares after hours? Damn, right at that 116, you got that bounce and boom. Wow,
Yeah.
NVIDIA only down $4 now. Unbelievable. NASDAQ futures rallied 120 points off the lows. Look at that move. Wow. Make that 140. Unbelievable. What a bounce. Wow.
New
Yeah.
all-time highs next up.
Oh, Graham, your
Damn, I
app
go
order
green.
is still in play, bro.
Yeah, I know.
123 print. 124 print.
Very in play. Well, they did this? Was it NVIDIA that did this 2 reports ago?
Dude. Well, I don't know about NVIDIA, but did you the Kava's, not this most recent one, but the one before? They beat revenue, raised future guidance, stock tanked like 15%. We bought it at the open the next morning, went back to all-time highs 48
It
hours
says
later.
they have several $billion. Blackwell expects to ship several $billion in Blackwell revenue. So probably off that note. So it don't look all doom and gloom. I think we'll have the special. Nathan, do you know how long? Till tomorrow, probably, or Friday,
Which special are you talking about?
for the penny option scanner?
Oh, I don't know. Josiah doesn't tell me anything anymore, Lance.
Yeah. If you want, what you can do is leave your name and number. Only Deanna will see it in customer support, and they can hook you up and give you a jingle. If you want to do that, you can leave it in the chat.
Yeah, I just changed it so it's only we can see it. And if anyone's interested in it, I believe we're running it until the weekend. Then we're going to start doing more. I have to double check, but yeah, we can get you guys in tomorrow for sure. Erica, still call our team or leave your info and I'll pass it along to Caitlin and we can see what hopefully we can do for you.
Oh, thank you.
All right, I'm gonna hop off. I can't watch this
Okay.
anymore.
Well,
update
you
you on
got
Telegram with
the
what I do.
conference call. It looks like at 5 o'clock, by the way.
All
The
right.
conference
Well,
call is at
hopefully for
5.
our orders, they say they're buying Microsoft and Apple and doing another stock split.
That'd be funny if they do another stock split. I can't believe they did a $50 billion buyback. They just did a stock split. How are they? I mean, I don't know. HPQ starting to fall. Hopefully that name cracks. It had a 3270 print after hours. Now 3386. So that should be good. And then is American Eagle in the morning? The American Eagle? When are they? Before market. All right. And then I think everything else is what, before the market?
Believe so. All right.
Oh, all right.
We'll,
Thank you all.
We'll
It
telegram
was
you
fun.
up.
Stick around for Deanna. Will have training on what, Tuesday of next week?
Yeah, I'll send out the time and everything.
Perfect. Perfect. And then Graham, Nathan, fantastic. Any last words, Publisher Nate? Is there anything you got going on?
Hey, I'm living on you guys' trade, so I just need HPQ to crash and $4 more in NVIDIA, and we'll see how things shake out.
Well, there you go. Straight from Publisher Nate himself. He needs more money so he could pay Stonkamania, the biggest deal in history, I've heard.
I need to buy groceries for 7 kids, so we need HPQ to crash. But seriously, jump in the penny option scanner before we end up raising it, because it's going to be a little while. We don't know how long, but in the meantime, every day you guys are missing trades in there. That's the cool thing about something like POS, is that every day it's ripping new trades. And if you're waiting a week, you might miss 10 double ups. So jump on in. Might lose a nickel on Google though too. So there's that.
Do not miss out. And you get color from me in the options pit and market commentary throughout the day. The good, the bad, the great, the stuff that you don't want to hear, but sometimes I try to warn of market dips, market turnarounds, and market eternals, and some correlated plays. So it's
And
always a good time there.
if you guys have the news flow scanner, it's a really great tool for that to kind of use together and look for patterns.
Exactly.
Graham just left us.
Oh, all right. Thank you all, everyone. I'll see everyone
Tuesday.
next
Yeah.
Tuesday for the training. And
Oh, Friday
Nathan-
you will have a wiretap. So you might see someone
Yes.
Friday.
Oh yeah, I'll see everyone tomorrow afternoon, actually. Tomorrow afternoon we'll be doing the trades live. And Nathan now is going to sell his left
You just left.
arm so he could pay for groceries, all organic green-wise.
We'll see you guys at Stonkomania later.
Yeah, and hopefully Stonkomania comes back.
You gotta show them the tractor another day.
Oh yes. I'll definitely show the
We'll put it
tractor.
on Telegram for everyone.